When governments were planning annual budgets and making economic forecasts earlier this year, no one could have predicted the social and financial disruption the novel coronavirus was about to create. Well, 5 months on, China has emerged from this pandemic, but many other countries still struggle. And a return to normalcy in 2020 still seems uncertain. How should we assess global economic prospects for the coming years? What message is China's annual political seasons sending to the rest of the world? And how can new challenges and opportunities be identified in such confusing times? To talk about these issues and more, I'm a little excited because I'm joined in the studio by Professor John Gong of the University of International Business and Economics. It is the first time that in 5 months that I've been joined by a guest physically in the studio. Welcome, John, and also from Tokyo by Takuji Okubo, Director of the Economist Corporate Network of North Asia, and from Shanghai by Michael Son, Co-Director of the FISF FinTech Research Center at Fudan University. That is our topic. This is Dialogue. I'm Zhou Yue. And Premier Li Keqiang announced that the government is not setting specific growth targets for this year. This is very unusual for China because usually at the agenda-setting political seasons of China, the government would prefer to set an economic growth target, and that is a very clear and strong message, not only for China, but also the rest of the world. So this is the first time probably in many years that China hasn't done that. First of all, what do you think of this decision, and what does it mean for China's economy? John?
I think it's a wise decision. Well, first of all, thank you very much for mentioning be back here for a long time. It's such a wonderful thing to be back to the studio again. But anyway, back to your question. I think President Xi actually talked about this issue during his meeting with the lawmakers from Inner Mongolian delegation. And he basically said 3 things. Well, first of all, he said that the reason that we didn't set a specific target is because that he's a little bit concerned that if we set up a target, that means that we have to really shoot for that target, and he's worried that there could be overstimulus. The kind of thing that we saw last time in 2008, 2009 for that 4 trillion yuan stimulus package. And I think this is something we definitely want to avoid. The second thing he mentioned is because he said it's more than just about exclusively focusing on a quantity number. We're also emphasizing quality growth as well. And for that reason, we're also very concerned about issues related with environmental protection, poverty eradication. All these things actually are not in conflict with the GDP growth goal, but not necessarily all aligned together. There could be a trade-off sometimes. So that's why I think the second reason why we didn't emphasize a specific target. And the third reason he mentioned is because uncertainties out of our control in other countries, for example, in Europe and the United States. This thing is still spreading, right? And especially actually in the southern hemisphere. Look at the numbers in Mexico and Brazil. These numbers are also increasing pretty fast. So China's economy is a very open economy, and there's about 18% of our GDP associated with exports, and exports section is inevitably going to be affected by what's going on in other countries and how fast these economies can come back, like China did. So I think these are the uncertainties we can't control, and that's the reason why we really specifically set out a
But John,
GDP.
on the other hand, China set a target every year. There was a reason for that, because businesses and local governments always look to that target to deliver, and that gives them reasons and incentives to boost the economy. Now it seems they've lost the objective, and it's kind of an aimless world.
This is a temporary measure. It's not going to be going on forever like this. I think in the future, definitely China is going to set a GDP target. I mean, that's for sure. But this year is very special. It's an extraordinary time. We do extraordinary things. So I think it's a one-time event. It's not going to be a normal practice.
And Michael, although we might not have a specific target, but China's economy is still going to grow, hopefully. What do you make of the potential for economic growth for China this year? Some say if we don't go into contraction, that would be ideal. What do you think?
Yeah, I think overall consensus is I think China grew at about 6.1% last year. Right now, in the first quarter, we're looking at something like a 6 and change sort of drop in GDP, so it kind of almost evens out, right? If you look across the board in terms of growth drivers for GDP in the country, roughly 2/3 of that is consumption, right? 30% of that is investment, and about 11% of that is export-related activity, right? We took a big drop in terms of consumer retail, but we almost made it back in terms of online retail, which picked up. So overall, I think if you look at all on balance, there's been a net balance of that. We might end up around 0% growth. But I will say one thing, which is basically the systemic shock to the system by COVID-19 will radically change the overall dynamic of how business is done in China, as well as society, how society operates at large. And I think in the long run, this will be a net super positive. I'll say that because basically there is a switch to basically digital economy type things. And I think that will drive a lot of efficiency and progress into the future.
And Mr. Okubu, it seems that China is satisfied with even 0% growth because of the rest of the world is probably doing even worse. Do you think this is really the picture for 2020?
Well, I don't think you should be happy about standing still while others get people poorer. I mean, for the world as a whole, everybody getting poorer is definitely a bad thing. So I think we do need to make sure that the global economy continue to grow, and at least people have a hope that this is a relatively temporary thing, and the growth will resume maybe in a year time, maybe might take 2 years. But we shouldn't let people despair that they're going to lose job forever.
But for 2020, we shouldn't hope for anything better than 1%, 2% growth.
Yeah, so at the EIU, we are forecasting 1% growth for China, so that's a positive growth, while the rest of the economy, including Japan, will probably suffer negative growth, and probably, especially Europe, they will suffer close to double-digit decline, and that's definitely a lot worse than they feared at the Lehman shock.
John, probably that's why policymakers from around the world have come up with stimulus programs of different sorts, or tax cuts, or stimulus, or and also injecting liquidity into the market. And let's look at China's work report of the government. A total of 2.5 trillion yuan will be cut from the fees and enterprises pay, and also tax cuts. The question is, why this number, and do you think it is enough?
Well, partly because we are already in the mode of tax reduction before this pandemic happened. So I think it's also the government's one of the
2019 was also a year of tax and fee reduction.
Right. So this has been on this path for some time. I think the second reason is that it's just a reality that in the first quarter, for example, the government's revenue has been radically reduced. So certainly, business are not paying taxes because of the business is not happening. There's no revenue, right? So I think both reasons combined contributing to the projected 2.5 trillion yuan tax reduction for this year. But I think overall this is a very good thing. So overall it's making Chinese companies more competitive. There's less of a tax burden. So overall I think our government should be accustomed to operating in a more sort of efficient mode. Smaller government is also a good thing. I think this is one of the targets by the current Premier Lee's administration.
But doesn't that point to another problem? That is the debt problem. The government is making less revenue, and the business is running on low inventory and profits, how can they?
No, it's okay because operating with some level of a deficit, I think the government work report says that's maintaining a debt level at about 0.6%, and that's actually very healthy in my opinion. I mean, look at the overall debt level, the central government debt level. It's a percentage of GDP, right? And compared to other countries, China's level is very moderate. I think there's way room to increase debt and fiscal spending. And I also want to emphasize is precisely the kind of fiscal policy is called for at a moment like this, when you have a natural disaster. The government should really step in, and we step in not just distributing cash to the poor and needy. I think this is being pretty much done right now in the United States, but this is a very short-term and not sustainable way of stimulating the economy. I think over the long run, you really need to, put out some projects to create some more jobs, create some more economic activities, such that can raise employment rates and raise people's income. Just giving, I would call it handout-oriented fiscal policy, is something that's going to be sustainable in the long run. So I think this is the right thing the government is actually doing. And also want to add a note that I'm actually a little bit more optimistic than just saying 0% growth for this year. 6.8% drop in the first quarter, right? And I think in the second quarter, we're probably going to see a number very close to zero. It could be above or could be below zero. Very moderate, around zero. And I definitely, if we don't have a second wave, I'm pretty confident that in the third and fourth quarter, one of these quarters, we're going to see a number that is very close
double-digit growth.
No, not double-digit, but very close to 6% positive side. Okay?
But that's a very big if. If there isn't a second wave.
Yeah, that I agree. It depends on the control measures here in China, as well as the how the situation unfolds in other countries.
Mr. Hubu, obviously it seems that almost all the governments buy into this rationale that we should probably endure short-term pain for long-term gain. But do you think we should be competing to have more stimulus, to lend more to boost the economy, that will probably make us into a debt trap for the long term?
Right. I think actually currently, given that the shock, the size of the negative shock, I think it might even be healthy to have a competition for stimulus. I think this is definitely not the time for fiscal frugality. The fact that Merkel and Macron in Europe agreed to let EU borrow as much as €500 billion to stimulate Italy and the rest of Europe, I think it really shows that this is definitely not the time for fiscal frugality. The government should be willing to borrow to stimulate the economy, to limit this short-term temporary negative shock.
Yeah, but it seems the decision makers here in China is trying to make a balancing act here, Michael, because the MPC this time has actually said the management of financial risks has been mentioned again at the political season. And MPC members are calling for legislation of even bankruptcy laws for financial institutions. That because, of course, they worry about the financial stability of those institutions. What do you make of this balance, Michael?
Well, I think it's very critical to make sure that we keep all the businesses operational and solvent, right? Especially the most fragile in the country, such as the SMEs. I think the longer that we can keep them on, a sort of life support so they can pull out of this, and hopefully we will have a return to the normal, then we will have the rebound that we expect. So that requires us to actually have all the protections and the support necessary to be able to support them.
Those financial institutions are encouraged by the government to lend to small and medium-sized enterprises. But that also leads to the problem of solvency of these banks. They're not willing to take risks at this time. It's just too risky. Why should they lend to small businesses which are running their businesses in a very uncertain time?
Well, it's not about lending necessarily, it's about debt forgiveness, right? Instead of foreclosing and shutting down businesses because of debt, you're just delaying the debt to a time where it's a little bit more addressable. Yes.
And John, what do you make of the lenders and borrowers game of?
Well, lending to small and medium-sized business has always been a big challenge here in China. Even before this, the banks, as you said, commercial banks wouldn't like to do business with these companies.
But COVID-19 brought a lot of more uncertainty.
Right. So the COVID-19 makes things even worse. So I think the government is really thinking about from the employment perspective. Small business are the workhorse of creating jobs. And you look at the layoffs, the people are jobless right now. Many of these people are working for those small-sized businesses. Companies operating a couple of restaurants, big companies that in the retail business. These people are hiring a lot of people, and certainly they need a lot of help.
But should banks bail them out?
I think there's a way of doing this. I mean, the banks, government is actually pitching in, trying to decrease the burden on the banks, decrease the cost of lending to these companies. The reason that these small businesses are becoming so difficult customers to the banks is really because of the cost. They basically have the same operating cost, but it's a smaller amount of loan, and then of course the interest is small, so that the bank can make some money on this, right? So this is not just in China, everywhere in the world. Banks, commercial banks, really don't like to deal with small and medium-sized businesses. But it's in this area the government can step in and say, look, if you need to reduce your costs, we can help you. And I think our reserve ratio, for example, is type of loan specific. In other words, you have different reserve ratios for this type of customers, loan customers, and for this type of loan customers. So in a way, they can actually increase the leverage from the bank in a way to decrease the cost of capital for the banks when loans are made to these companies.
I'd like to talk a little bit about monetary policy since you mentioned that, because the governor of China's central bank, Yi Gang, said during the NPC session that more flexible monetary policy will be adopted as there's been positive turnaround in the Chinese economy. And also, we have seen successive cuts of requirement for reserve ratios over the past 2 years.
Right.
How flexible will that be? How will the monetary policy going loose be looking like?
There are a lot of details about how to do this, actually. And this is something, I haven't really seen any disclosure of very detailed operations. But my sense is that the overall objective is to really pump money into the economy and to increase money supply, basically, through various means. The central banks certainly have means to increase money supply in the market. So they're doing this. And I think essentially the idea is to increase liquidity, increase the leverage at these banks to pump more money into the economy, to propel the banks to make more loans, to try to help those companies in need. I think that's the overall objective. And I think, if you look at the downside of this is, of course, inflation, right? It's inflation. But to be honest with you, I am less concerned about inflationary level because it's not just driven by the monetary policy, but it's also driven by the commodity prices. Worldwide, commodity prices are slumping right now. I mean, look at the oil price, look at the iron ore, look at all these basic materials. They're all at a very low level. So at this kind of a level, I don't think there's too much of an inflation pressure right now. But of course, down the road, we have to be keeping a close eye on what's happening.
And another angle to think of this, Michael, is will the liquidity problem solve the economic problem? Because many people say it's not that we need liquidity in the market, but we need demand from the market. But there is a drawing down of demand in the market. It won't solve the demand problem. Michael?
Yeah, so it depends on where that liquidity goes, right? So in the first crisis from before, a lot of that went into infrastructure development, and actually you saw that in this new meeting, NPC meetings, that they decided explicitly to say that it's not going to be in the typical infrastructure. We also know that recently there's been new initiatives to push what we call development into new infrastructure, right? IT infrastructure that will actually build the digital economy. And I'll emphasize that the digital economy is a very important part of this, because what that does, it gives massive financial inclusion. It lowers a lot of the costs associated with doing business because things are online. And importantly, it drives consumption. Okay, and as I mentioned before, consumption is roughly about 60% of the growth drivers of GDP. So in one fell swoop, if you actually put that liquidity into new infrastructure, and you have a multiplier effect which translates into much higher consumption, and that I think is the best strategy for the country to recover.
And Mr. Okubo, do you think this is also happening in the rest of the world to boost consumption by investing in digital economy and new infrastructure in other parts of the world?
Indeed. So actually, Japan is a typical example. I think Japan is one of the, I would say, backward country when it comes to IT adoption.
Backward?
But all that COVID-19 changes all that. Yes, yeah, indeed, that's unfortunately is true. So, but then what we saw is that, at the end of last year, only a quarter of SME were able to remote work. In the most recent survey, end of April, close to 70% of SME are starting to say they can actually have a capacity to do the remote working. So, and then Japan is also starting online medication. So now I can actually see the doctor without actually seeing, and get drugs, prescription, everything online. So I mean, this crisis is also giving a lot of catalyst to many countries, including Japan, to accelerate the adoption of digitization.
Talking about backwardness, probably Japan is really lagged behind in terms of digital payment and digital economy. The interesting thing is China is the first major economy in the world to launch a national cryptocurrency, although it is still a pilot project, but obviously it will be put into use when it is mature. So, Mr. Okubo, what do you think this means for the future economic mode in China and also the rest of the world?
Right. So I think it's an experiment that China is adopting, and I think the aim, I think Chinese government also aim to try to let adopt cryptocurrency and probably try to encourage more financial integration with China at the center. So I mean, let's see how it works. I personally. Japan is often criticized as a laggard in online payment, but the positive thing is in Japan, everybody, including babies, are able to have a bank account. So it's actually bank transfers, online payment. Whereas in U.S., like 20% of even adults don't have a bank account. So there are many ways to go online in terms of a payment, and not everything doesn't need to be cryptocurrency.
And Michael, you're an expert of fintech.
I would like to comment on that.
Yeah, go ahead, Michael.
Yes. Yeah, so a couple of things, right? I mean, we talked a little bit before about why would the banks want to bail out SMEs. The problem is banks are overloaded with extra costs and inefficiencies, so that does not make sense. However, if you look at all the new tech fin companies, like the Ant Financial, providing a lot of very low-cost loans, they can do it, service a loan with under 0.5 RMB per loan loaded cost. And they have all the big data because it's digital economy. They have the transactional records such that they can service those loans and provide microloans with very low credit risk default. That's enabled online. That's enabled because of online payments. That's number one. The second is,
but
I
they're
would
not
say
traditional
that
financial
the
institutions
experiment
anymore.
Correct. I think the future will be with tech fins and with other sort of fintech startups, and banks were going to have to actually work it to be able to be competitive and survive in the digital economy. Yes. The other thing is a comment on the digital currency, the DCEP, that's being test-bedded right now. Actually, at our Fudan Fanhai FinTech Research Center, we actually wrote a paper on this about how the digital currency could be applied to provide stimulus as a new sort of monetary and fiscal tools for the central government, right? Because when we're talking about DCEP, we're not just talking about a payment methodology. We're talking about a brand new technology
the Chinese
that can
version of cryptocurrencies issued by the central government, central bank.
Correct. Right. The digital currency electronic payment is the name given to the digital RMB, as it were. So in this DCEP, you can imagine through the technology to actually provide additional functionality of programmability, which will give you new monetary and fiscal policy tools. So for example, during the great financial crisis, the stimulus in the U.S., there was billions given to the banking industry in order to provide liquidity, and the idea was to trickle down into the economy.
Yeah.
But what the banks did was they took something huge, 97% of that, and did stock buyback programs, right? With basically a counting trick to enrich the few who had access, right? So that's not the intended effect of stimulus. Now, if you had a digital currency, okay, number one, you can go and actually give every household, every individual a digital wallet, so you can direct the money much more efficiently.
Yeah,
Second, you can actually
that really
program
makes
in
sense,
any
John,
sort of restrictions.
because what I heard in the U.S. is that they plan to give cash to Americans, $1,200, but many of them haven't received them because they need a bank account, they need a check sent to them. But if you have a digital currency, you can do it instantly. That improves the efficiency of finance dramatically.
Exactly. That's certainly, one of the big advantages of the cryptocurrency. But I think there's actually another aspect that I want to add. That is in the international context. In other words, how do you actually avoid, the SWIFT system-controlled United States international trade settlement system? I think it's a very interesting idea when more and more countries start to use cryptocurrency for international transaction settlements, and when China's cryptocurrency is being adopted more internationally. So this is actually an alternative system, I think.
Do you think this is a very interesting omen that probably financial integration will happen at a faster speed because of the upgraded technology that we see here?
Well, yeah, absolutely. I mean, look at the development of the online business. All the digital stuff here in China is moving very, very fast. You have, hundreds and hundreds of, startup companies get into this. You have, billions and billions of investment, VC investments going into the business. I think, the digital side of the economy is probably one of the most vibrant portions of China's GDP, right? And there's no SOEs involved here. There's all great private companies, and they're growing very fast. Alibaba is still growing very fast, as big as it is right now. So, I'm very bullish on the fintech-related developments, and I think that's a new frontier.
And Mr. Okubu, in terms of finance, do you think we are taking enough risks to generate enough revenue and benefits? What do you make of what is happening in finance?
So, well, I used to belong to a finance industry. I used to work for Goldman Sachs, so I was a part of a financial industry. So unfortunately, for the last 10 years, I think not just in the US, but in most of the world, the status of our finance industry has been declining. And I think that will continue to be the case.
But efficiency will improve?
I think it depends. So there are benefits to fintech. However, even if digital or not, somebody needs to assess the credit. So I think the role of bankers in assessing the successfulness of a certain company, that will always remain. So in that sense, fintech is not going to eliminate bankers.
All right. I hope I have more time to talk about this. Very insightful discussions. Thank you, Mr. Okubu. Thank you, Michael. And thank you, John. And you've been watching Dialogue here on CGTN. I'm Zhu in Beijing. Thank you so much for watching. Goodbye.